Welcome to Jill on Money, powered by The Compound. I am Jill Schlesinger. I'm a certified financial planner. I'm here with my executive producer extraordinaire, Mark Talercio, also a certified financial planner.
Hello, Joe. I like that French blue on you.
Thank you very much. I like that you've labeled the color perfectly. I
Well,
appreciate that.
one of my jobs early in life, I worked for, do you remember the company called Van Heusen?
Of course.
They're still around, right?
I
think they are.
Shirts.
But dress shirts. So I was I was like the stock guy. I did all the inventory and there was a lot of French blue.
I know a guy whose name is John VH and a last name.
Oh, yeah?
And the VH is Van Heusen.
Oh.
I know. It's great. Hey, you know what we're talking about today? This is kind of a rough week for me as we record this. There's a lot of layoffs at my company, Paramount Global, because I work for CBS News. I'm the business analyst there. And I've gotten a bunch of questions from people who were let go about their retirement accounts. So this episode is dedicated to my unfortunate coworkers who have just gotten their tushies handed to them and have been let go. Because the question is, what do I do with my retirement account when I am let go? And I think this is, whether you leave on your own volition or not, you usually have three big choices. Number one, leave the money where it is, because most plans, you used to not be able to do this, but most plans do allow you to stay in that 401k or that 403b. They don't force you out. They used to. I don't think they do so much anymore.
I think it depends on the balance.
Yeah. So, okay, that's a good point. So leave the money where it is. Next, leave the money where it is, but when you get a new job, just roll it into the new plan.
Mm-hmm.
And that's a direct tape-to-tape transfer. You don't have to get a check. Really, the money goes, you would say, okay, I'm working at CBS. I lost my job. I'm going to work to NBC. Now I'm just going to move my money from one organization to the next organization, presuming that the new company's retirement plan is a good one.
All right.
And that's a presumption, not an assumption.
Yeah.
Right. Okay. And the last option is to roll the money directly into an IRA rollover account. Now, this could be done anywhere. You can roll it at any place where you can buy the funds, the stocks, the bonds, whatever you want. And this gives you control over it.
Mm-hmm.
You can later roll it into a retirement account as long as the plan allows it. So, Mark, of these three options, what's the one that you like?
Well, let me tell you what I did. So from 2000 to 2015, I worked under the CBS News umbrella. So I had my 401k at CBS News for 15 years. I left CBS in 2015. My 401k was there. The place where I went, the plan was awful.
Oh, right, because it was a little bit of a startup-y environment, and it was a bad plan.
The place was awful.
Because I remember we looked at it and you said, these funds stink and they were expensive.
Yes. So I left my CBS 401k in place because it was good. It was with Fidelity.
Yep, still is.
So I left it there for the time being. I went to the little startup environment, and then I eventually left that place. And you and I launched the Jill on Money podcast, and that turned into a full-time gig. And one of our distributors was taken over by another company. And with that company came a good retirement plan, a good 401k that was run by Vanguard.
Ah.
So when that happened, that's when I rolled my CBS 401k from Fidelity into the new plan at Vanguard. That's where everything is today. I didn't want to go into a rollover IRA. I mean, I could have and then gone from the rollover IRA into the new job. I didn't want to do that just because I didn't know if it was going to be allowed. And I wanted to preserve the option to continue doing backdoor Roths.
Yes. So let's just talk about that for 1 second. If you have an IRA rollover account and you're thinking about using the backdoor Roth, that rollover will prevent you from doing it.
It's
so
not impossible. It just gets messy.
It's a lot messier. Yeah. So if possible, what we hope happens for you and my dearly departed colleagues, that you take the money, you roll it into whatever your new plan is. You can leave it there for some time, obviously.
Yeah, I did for a few years.
But if you have the opportunity to go into an environment where you have a retirement plan and the assets in that plan, when we say it's a good plan, we don't say that they have the best performing funds. We say, are there index funds in there? Are they cheap index funds? Is there a way that you can just use this plan going forward that's seamless? One of the things that you and I agree on 100% is less is more.
100%.
And the more accounts you have, the more chance you have to overlook something. You have these orphaned accounts that are floating around. We know so many people who've changed jobs in just the last 5 years from one to the other. And there are these poor orphaned retirement accounts. Go bring your orphans over to your new environment. I think you'll be really happy you did.
And sadly, a lot of people forget about accounts that they have out there.
Yeah. And, that's an important thing because you might forget about it. You might have forgotten that it was invested in cash or, that money rolled in and you forgot to invest it. So when your money is in one place, you can monitor it. I don't think you should go every day. Don't go crazy, but you can at least take a look at it quarterly, semi-annually, annually. Make sure your allocation is in line. Make sure you're using those cheap index funds and don't mess around with it. No messing around with retirement accounts.
You're not looking daily?
I don't know. I haven't looked at my account.
How often do you look?
Never.
Like once a year?
Once a year. Maybe.
And is that you're actually logging in or are you getting a statement sent to you?
No, I don't even log in. I do one appointment with my financial planning firm. And they tell me, how'd we do last year? And I know how we did because I know what kind of investor I am. Wimpy. And that's it. And at the end of the year, I do tax loss harvesting and I give low, so I use my low basis positions and use that to gift into my donor advised fund. Yeah. So it's really the end of the year that I'm looking.
I'm like you. I don't look, but I know because all our entire stock position is essentially the S&P. So I know it. I hear it on the radio because I listen to. I'm nuts, and I listen to news radio.
Thank goodness.
So I hear what the S&P did on a daily basis. So I know what's going on without looking. Yeah. But people, we talk to people, and they check weight like daily. It's like,
way too
guys,
much.
You're driving yourselves nuts.
Not necessary.
No.
I will say one thing about rolling over maybe a small amount of money. We've touched on this about if you're going to have a trading account. One reason to roll over an account is that you want to start trading a little bit. So if you have $500,000 that's in your 401k and you have an old retirement account somewhere and it's like 30 or 40 grand, you can roll that into an IRA rollover and you can trade like crazy. And then no excuses. You have to take your gains because there's no tax due. And so that's a beautiful thing. That's a good way to be trading. Of course, when you lose, and you will lose, you can't take your loss either. But we'll get to that in another episode. All right, gang, if you've got a question about what to do with your old retirement account when you leave your employer, either voluntarily or involuntarily, give us a holler. Go to JillOnMoney.com, click the Contact Us button, write us a note, and we would be happy to answer your question. Thank you so much for watching, and we'll talk to you next time.